Hi everyone, quick Sunday update. I actually wasn't planning to record again this week. I had just posted the usual weekly market recap and then, well, everything crashed. On Friday night, we witnessed one of the most violent sell-offs in crypto's history. Bitcoin dropped more than 13% in an hour. Ethereum fell even more. Some altcoins literally hit zero on certain exchanges. And even now, it's Sunday, October 12th at 3 p.m. CET. We still don't know how markets will open tonight or if Trump will de-escalate the tariff rhetoric that started it all. This wasn't just a correction, it was a market breakdown. And I think it's important, no matter how we will open tomorrow, that you know what happened and how it works and what it means for the week ahead. So let's dive in with the first chart. It actually started on Friday, midday. Trump canceled the planned meeting with China, complaining about Beijing's rare earth export strategy. And that single comment flipped every risk market on the planet. Stocks rolled over, tech and AI names sold hard. Chinese tech got crushed down 8 to 10% into the close. Gold and silver held firm as money moved to safety. But right after the year's close, the real shock hit. Trump announced 100% tariffs on all Chinese imports. So tariff was completely priced out of the markets. Now we had to price it in again. And that's when crypto broke. So here's the chart. Bitcoin and Ethereum dumped instantly. So that's a 5-minute chart. Altcoins followed in free fall. So what started as a geopolitical headline turned into a systemic market failure within minutes. And you see in purple here, the coin 50 is right in between Bitcoin and Ethereum here, where it should be due to the 50% Bitcoin weight. But you see others, that's the altcoin or the crypto X top 10 coins completely crushed. So what happened here? You also see it's more than a normal crash. Some of the coins completely were wiped out, almost to zero. Atom, for example, was almost 0 cent. So did Caspar, right? And then you see the rebound within minutes, an hour again. That's not normal behavior. So I have to explain what happened under the hood. Perpetual futures markets are a zero-sum game. When one trader wins, another loses. But if the losers can't pay, the exchange liquidates them to protect solvency. So normally those liquidations get filled by market makers, the liquidity providers, who quote both sides of the book. But during the crash, those market makers vanished. So they pulled quotes, they widened the spreads, which is normal behavior, or even froze algos here. But either because their hedges failed or they were hitting margin calls elsewhere. And so suddenly there were no buyers for the liquidations. So the exchanges had to start auto-deleveraging, or ADL. And ADL is the nuclear option. It closes even winning positions to protect the exchange. So it's really brutal. Traders who were short and right on direction still got liquidated because the system couldn't pay them their profits. And in that moment, the whole market turned mechanical, selling just because the plumbing demanded it. So for example, Sui here, that's not a normal wick to the downside. So that's almost unimaginable. I've never seen such a brutal wick to the downside. But this is when liquidity completely vanished. So one of the bright spots here was hyperliquid. So the hyperliquid's hybrid liquidity pool called HLP. The HLP acts as an on-chain safety net. So when no one's left to buy forced liquidations, the HLP steps in, automatically buying assets at fire sale prices. So on October 11th, HLP became the biggest buyer in the market. It absorbed hundreds of millions in liquidations and reportedly had a record profit day as prices rebounded. But there's a flip side too. It means liquidity is concentrated, right? So in that hour, one pool essentially became the market central bank. So if HLP had failed, the entire venue might have gone dark. So what does it mean for traders? If you look on X, right, over 1,000 traders lost more than $100,000 in a single day. 200 lost over $1 million, and 358 accounts went completely to zero, including one trader who lost over $19 million here. Yeah, you can feel sorry here, and I hope they learned their lesson. So the system froze, margin couldn't move, and hedges failed to execute because exchanges went offline or market prices desynced. So it was a stress test, not of balance sheets, but of infrastructure, I would say. And then there is the timing, right? So you have massive short positions. Yeah, the 330 million ETH shorts, and then another mega short in Bitcoin. And they were open just minutes before the tariff news broke. Both were closed for multi-million-dollar profits. So I ask you, was it luck or inside information? I have my thoughts about it. So it's hard to ignore the timing. And it's another reminder of how opaque and unregulated offshore derivatives markets still are. In traditional finance, this would trigger an SEC investigation. In crypto, it just trends on X. So does this mark the top of the cycle? I think probably not. The data looks more like a leverage flush than a macro peak. Bitcoin open interest dropped 31%. Total derivatives open interest fell from $115 billion to $72 billion, and the market reset. So that's painful, but healthy. Now, when we look at Bitcoin dominance, it's showing a rising wedge here with a shooting star reversal here, this candle. And that's a classic exhaustion signal. So that suggests to me the Bitcoin outperformance phase is mature, and the next leg could favor ETH and quality altcoins once a stablecoin dominance retreats below 5%. Yeah, so that really speaks of a falling Bitcoin dominance, not a rising Bitcoin dominance. Yeah. So the setup for the next rotation phase may already be forming. And then another chart from Peter Brandt. If you look at the longer term charts, it's still okay, right? Nothing happened here. But we have to admit that traders got hurt, wiped out. So it will take a little time before really the greediness comes back. And another perspective, our cycle monitor, post-election cycle monitor for Bitcoin, you see that the current line where we are is still almost right on top of our projection line. So from that perspective, the market is not broken. And that's, I think, the positive message. Now, that's where we are at this Sunday. Maybe Trump softens his stance, maybe not. We'll find out tonight when Asia opens. What's clear is that this wasn't about fundamentals. It was the pipes, the fragile plumbing underneath the market, and the system held together, confidence didn't, and a lot of participants got wiped out. So we will have to do some repair over time, and probably maybe the next peak will take longer. Maybe it postpones everything more to the Q1 next year than to Q4 this year. We'll see. So if you like that, smash the like button, subscribe to our channel for further updates. And as always, thank you very much for watching.